Good morning. Welcome to Admiral Markets, everyone. Thanks for joining today. Thursday again. Time flies. 24th of April. We got about 1 week left, I would say, in April before another month is over. Disclaimer, online educational material here is intended for a global audience. Please take into account that it may not be suitable for everyone. To get more info on that, take a look at admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. With that said, also we should warn of the risks involved. They are high and it may not be suitable for everyone, not suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. Alrighty. By continuing watching this webinar, you agree with the disclaimer and the content mentioned here. Good. Thank you so much for your attention. We're going to take a look at just this slide and then the risk calendar, and that's it. Then we'll move over to the charts and take a look at what's going on with price, technical analysis, and look at the currency pairs and market. This is basically the topic of today, is trading psychology. So it's a bit general in the sense that we don't have any specific focus of tools or indicator or strategy or time frame, but more emphasize that when one is in a trade or even before a trade or after a trade, trading psychology is paramount in success. How many times have traders backtested a strategy that they were not able to implement live? Why? It's because of the psychology, right? We test something, we see that it works, but testing something and going through, let's say, 1,000 trades within a couple of days is a whole different story and a whole different cup of tea than actually going through each and every trade one by one over a year, right? That's a lot different story, because then we are thrown with the emotions or engaged with the trade, and all kind of emotions might disrupt our implementation of the trading plan, and that could cost, at the end of the day, the equity curve, right? It could cost the profitability, or it could reduce the profitability, or it could turn a winning strategy into a losing strategy. All these things are influenced by the trading psychology. That's why we need to find a trading strategy that matches our psychology. And when we're looking at the charts, I will try to, when possible, emphasize certain spots where maybe some problems could arise with implementation of certain plans. Now, that's a bit general because there's so many plans, so many trading plans one could have. So of course, try to stick to what I usually use and show what kind of difficulties there could be sometimes, logically. So anyhow, back to the sync. To find a sync is very important between one's strategy and psychology, because that will allow us to be able to implement the strategy easier. Of course, it's easy to say that our psychology, failed in implementing it, but sometimes it's not that straightforward. It's also, it's like both sides. Maybe we failed with, the implementation, but maybe because the strategy just doesn't suit us. We need to find that balance between the two. And that's just very important. We actually discussed that last week, I think, or 2 weeks ago. Anyhow, this checklist is prior to entry still. It's important also from a psychology point of view to implement this checklist prior to entry correctly. After entry, I should say, we have the trade management. That too, of course, deserves the a good trading psychology to implement the trading management plan. And then, of course, we need to evaluate after we've exited this plan. We need to be good in this as well, and be sturdy and patient and disciplined in doing that as well. So there are basically 3 phases. Let me open my drawing tool. Prior to entry is 1. Before entry, B entry, before entry. 2, A, E after entry. and then 3 after exit. Also 8. Okay, well, I'll put an X after it then. All these 3 things, having a plan, having the trading psychology is important. It's important for all these phases. This specific plan that or short plan that I'm showing you, these 5 steps, is meant for phase 1, right? That's where you look at before entry. But the trading psychology is important for all 3 phases. So what is the before entry? Defining the trend, searching for opportunity, checking for filters, looking for triggers, and then deciding how to enter, the entry method. To do that, one could use various tools. That depends what you like and what is suitable for your psychology. I use fibs, trend lines, moving averages, oscillator, for instance. Take a look at the Admiral Markets in social media, for instance, the Twitter and Facebook, of course. And with that said, we have German IFO Business Climate Index in 1 hour 7. We have Draghi speaking, that could be a rocker, and Spanish 10-year bond auction, and dollar core durable goods. Let's take a look at the euro dollar. Euro dollar is, or had an upside yesterday. Let's see, we were looking at the euro dollar yesterday, I don't know exactly when. Yeah, oh yeah, with this upside. Well, the upside lasted pretty good. We had a good bounce off at the 138 level and went up to about 138.50, but didn't get any follow through the rest of the day. Oh, sorry. I wasn't aware that the screen was frozen. Sorry about that. Hopefully you saw those steps. So yesterday we had the up, down, up. Basically, not surprising that we didn't get a follow through yesterday because the daily, let's face it, the daily movement had already moved a lot. This was a pretty big day, candle in fact. Therefore, I'm not surprised that there was some struggle to continue and we just got some flatness throughout the day, or downside throughout the day. Same scenario though today is valid. I would now expect some upside. If you look at this trend line here, support trend line, so there seems to be a bit more validity for upside. Break of this trend line and a bounce off this trend line looks bullish. Yesterday was already looking bullish. In fact, we had bullishness throughout the day. Up, sideways, up, deep pullback, but up, and then of course the end of day correction. That sometimes happens because basically there's already enough daily movement throughout the day. Not expecting follow through that particular day. The average daily range was already hit, so, or maybe even more than that, so no follow through on that. From a hourly perspective, well, let me still look at the 15. We still have an H3 short, but if we break the H3 short, hook back, those could be good longs upon the pullback for upside. From an hourly perspective, how does that look like? We had a up movement here, and we have correction, as we said yesterday. We broke out of this trend line yesterday already. This could be a break, pullback, and continue. We could be looking at the continue part of this break. From a 4-hour perspective, we had this upside, correction, break. This could be break, pullback, and continue. So you can see we're in the continue of the continue of the continue at the moment. Daily chart, we already know, is up. We already discussed that this week, but just a quick review of what we're looking at. So let's take a look at the weekly candle. Weekly candle, we have last week's high. That was actually probably one of the reasons why we couldn't push through that much higher than that yesterday. I wouldn't be surprised to see a break of that high today or tomorrow. Probably today, though, preferably to at least maybe this top in here, for instance. So that could be the target for today, about 139, roughly, I would say, as we're bouncing off the moving averages here. You can see price dipped down, broke back above them, hooked back to them, could be a bounce, just like we had here. Dipped down, broke above, hooked back to them, bounce. So I would say there's a pretty good intraday space to the upside. Therefore, from a larger time frame perspective, therefore, I'm still early in the game because the euro just made this upside movement here, but it's looking like a good hourly candle, just like we had on Tuesday, like this one. So a retracement of that, I would still wait for maybe a couple of candles here. Still early, but if we get some follow through, push a bit through the H3, then get the bull flag, that's exactly what I'm looking for your dollar upside here. But I would like to break up H3 and then a pullback, and I'm looking for the longs at here and here, where the green circles are. Pound dollar. Pound dollar had downside momentum throughout the day. We talked about the potential for pound dollar to retrace to lower levels yesterday, but I said the pound yen is better. So let's take a look at the pound yen first. And we were saying that a short somewhere in here, we were looking at this live, was a good setup, but wait for some confirmation. So let's take a look at that, how that played out. We had wicks here about 20 minutes after we closed the room, I think, maybe 10 minutes. And we had wicks here and followed through, as I said. Dollar yen was looking bearish, pound dollar was bearish, so the pound yen was looking like an optimal mix, and that proved to be true. Went down from 172, almost 172.50, all the way to 171.50. So 100 pip space. Now I'm not saying everyone would get exactly 100 logically, but a good fall on the pound yen, and actually it still continued lower, but that was a pretty big significant pause before it fell again. If you managed to survive in that, maybe you got a few more. It moves not that much more though. But that was a good downside. So that's partly because of this pound dollar downside. Logically, it had a bearish day throughout, let's say the bearish momentum throughout the day. Every time it moved down, hooked back, moved down, hooked back, moved down, hooked back, moved down, and then went into overnight consolidation. Did anyone take that pound yen by any chance? Let me know. It would be interesting to hear it if you did, of course. Let me know how many pips you managed to catch out of that if you did, okay? Pound dollar, or if the pound dollar for that matter, went also down. I like the pound yen more because of the yen factor, but pound dollar also moved about 60 pips. But that was a reversal retracement setup because we were in uptrend, but we said there's a divergence, there's problems with this upside, there's a top here, it's not going to go anywhere, there's a high chance for further downside. This upside, I would still be careful with the pound dollar personally, because we have 4-hour divergence. I would still expect one more fall eventually to lower grounds to this medium moving average right in here, at least. That's what I'm expecting. So for the moment, although it's an uptrend, this upside, I wouldn't trust that much. I would see it as a correction potential for more downside because of that. Let's take a look at the 15. GU is right at the H3, 168.01. So let's see. This could be a resistance as is already, but then again, we did have some upside momentum like the euro dollar, so maybe we'll see some follow through. If it does get all the way to here, that would be an interesting resistance point for maybe some retracement to the downside. For the moment, though, I wouldn't be thinking of shorting it, even though I see the potential for price to make one more correction. it's too soon to tell whether it will happen now or later or maybe not at all. I would rather wait, be patient, wait for more clues. But in general, from this area would probably be interesting, depending on how circumstances are. When price gets there, it will be an interesting area to look for weakness and price action signals of a potential turn back to the downside at this spot. That's what I would think of the pound dollar. Euro pound is moving up a lot indeed. It broke out of that falling wedge basically, and it made a good upside. Back probably at some kind of resistance though, because this is a bigger move down. This is a bigger trend down, right? So in that regard, it may not be surprising that we also find resistance again. I'm not a big fan of this euro pound. This could be a bull flag for more upside, but because it's a downtrend, it could easily be just the beginning of one more fall. And I'm not interested in either side at the moment. I'm not a big fan of the euro pound anyhow. So Aussie made a tremendous fall, but after that, as I told you yesterday, don't expect anything from the Aussie because it just had its daily movement already behind it very quickly. So the Aussie was, as I mentioned a couple of times yesterday, was basically off the table because of that. It wasn't interesting to trade because there was hardly any expectations of movement during the day. And that proved to be true because it just oscillated, bouncing back and forth. No trade unless you're really geared towards catching these couple of pips up and down, which is difficult, by the way. There was really nothing to trade, and anything traded was probably would end up in a loss or in some kind of break-even trade that is clicked out because after hours and hours of sitting in the trade, it just didn't go anywhere. What now, though? What today? We are having a lot of downside momentum, that's for sure. However, I would say that we're still pretty close to potential support here. So it's not easy a situation. It was a dramatic fall, so most likely some follow-through will occur to get divergence between the hourly bottoms. Because of the 4-hour support, potential support in this zone, we could expect, for instance, price to retrace a bit of that fall, maybe to the 50 fib, 38.2 fib, turn at that fib and fall to the minus 272 or the minus 618 and bounce at one of these two levels. That's what I would be expecting. Now, what is interesting to trade? In my opinion, trading it to the upside is not interesting because the 38.2 fib is only 12 pips away from here. That's way too close for any upside trade. The 50 fib is a bit higher, but we're not sure if that price will get there. So, well, we never are sure, but the chances are not that great. So, no, upside, not interesting. The fall from any of these fibs is a different story. That could be interesting from these fibs to the targets. And the bounces at the targets to the upside could also be interesting. So that means we need more patience. Patience for price to either reach these fib retracements or patience for price to reach these fib targets. Or in the worst case scenario, wait for the break of this trend line if price doesn't get to the 38.2 fib. But that is not my favorite setup because I would rather see price go up to hit at least the 38.2 fib. And we see a pivot at the 38.2 fib, and we see an H3 short at the 50 fib, providing confluence at 93.10 and 93.20 for possible likely bounces to the downside. If you don't want to anticipate a bounce and you rather wait for a confirmation, let price hit these levels, let it turn, let it break this blue trend line, and try to trade the break of that. If you want to trade it a bit more reactionary. All right. So if you have any questions, let me know. Otherwise, that's the AUD USD. How about the dollar yen? Dollar yen, I'm not too big fan of this pair because it's more looking like a basket case in the sense that it's just not going anywhere. It's just bouncing back and forth. There's no direction. Moving averages are all flat. Not all of them, but at least the intermediate and the long-term ones are flat like this. Price is bouncing outside, back in, outside, back in, outside, back in, and it's just not interesting to trade like this, in my opinion. There is a potential break of a channel we discussed yesterday, like that. And this was a good hook back. For those that took it, this was a good hook back. I wouldn't be surprised to see some follow through about that. We talked about it yesterday too. I forgot actually to refer to that. Is that there was an L3 here, right? And we said a break of that, we could see downside down to the L5. I don't know if we got to the L5 exactly, but we did make some good fall from 102.50 down to 102.50. Not a lot of pips, but still something we discussed. That was a good trade. Something that was about to happen, but still happened after our trading room, in fact. We got the retracement throughout yesterday, and then today started to fall again in the same direction as this fall. Therefore, I would say some downside continuation could happen. I wouldn't speculate or trade it until we probably break the L4 at the moment. I mean, if you took this bounce, great. Good job. You can hang in there, move to the stop loss to break even, and it was a good 78.6 fib. Awesome job. Great fib trading. But if you're waiting for confirmation, you could have, for instance, taken the break of this 50-minute fractal or the hook back here. That's a bit more confirmation. Or if you're not in that trade by any chance, right? Like some of you are for sure not in that trade. Then what I would now do is either wait for potentially even one more hook back, maybe for instance to this top right in here. That's a riskier one though. Or the break of the L4 and S1 for downside down to 102 right here. That space. Now that space to the downside, we already had a break, pull back and go. It would be continuation. This continuation here, it's a small space. It could fall further, by the way, because if you look at the 4-hour chart, what do we see here? We see quite some space until we get to the bottom, right? That is something that we could fill, within the next days, potentially. But if you want the most secure piece, this is obviously a big piece of real estate, the big piece of movement. So it's not going to be something we can catch in one go. If you want to trade something that is quick in and out, then this particular slice of price action is more secure. So it's a higher probability that price upon the break of blue will go to the minus 272. If aiming for the minus 618 or this target, we never know if it will get there. It could be a downside and then a bounce bigger than we want, right? Basically, it would not, the trend here, and this is a good question from Marcio, is how to define the trend in these charts. And that is totally true because there is no trend at the moment. Not on this 4-hour chart, not on this daily chart. It's just a consolidation like this. And the trending modes were great. Even parts of this triangle were not bad. This is very choppy, very yucky though. On a daily and 4-hour, certainly. On an hourly perspective and from a 15-minute perspective, despite the yuckiness on the daily and 4-hour, I do see potential for some small downside trade when looking at the 15 and hourly. I probably wouldn't aim for anything more because indeed of that lots of ups and downs indeed of the 4-hour and daily. Let's see, pound yen. We trace back to the pivot. We had a big fall. That's something we were talking about yesterday, the fall from here, right? That fell nicely, then retraced. This is not as clear. I'm not sure about the pound yen because primarily because the pound, we don't know exactly what will happen today. Oh, it's actually breaking through H3 as you see. So there could be some upside up to hour 1 and H4. So therefore pound yen could also have some upside. So I would be a bit cautious with this one. For the moment at least. More downside could happen, but we had a big daily candle yesterday on the pound yen with also a big wick at the bottom. So pound yen, I would still be careful until pound really gets to a higher resistance. Euro yen, I would be careful too because the euro looks upside-ish at the moment. Aussie yen downside could be more interesting because the Aussie, as you know, the odd USD at least, has a potential to move down according to the odd USD analysis. Therefore, this odd yen could be in a better shape. For downside. Now, obviously, we're in an uptrend, but we also had divergence between these tops. Well, although we already reached the target effect, sorry, we reached already the medium moving average, so scratch that. It's not a great pattern. This 1 hour chart is not looking that great. It was a big fall. Just from that perspective, I guess there's a potential for more downside. I don't know. It's just not that great either. Maybe below L3 down to L4 and below L4 down to L5. Potential downside. Something to keep an eye on maybe on the odd yen. Not too sure. Maybe the odd USD is better. I don't know. Pound, odd, just because of the bigger structure, the 4 hour and daily. That's why. Pound odd and euro odd had the same thing as the odd USD. Right? Because pound odd also moved a lot, just like euro odd, and we had a tremendous movement before actually the trading day hardly started, at least for me. So that particular problem the euro odd had as well, just like the pound odd. I'm just grabbing here the euro odd. Same story though. Here too, just like the odd USD, we could have maybe some dip for more upside. If we put a fib on this upside here, what do we see? The potential for these fibs, the pivot and L3 to act as support for more upside. Here too, pound odd acting with as a support here for upside. That could be interesting today. Still early on the euro odd. If I look at the moving averages, they're flat at the moment. There's no momentum. The pound odd has a bit more momentum, just barely. It's still though early. You can see moving averages are still flat. I want to see some momentum. I want to see some thrust, pull back and go. But those could be good on the euro odd and pound odd. Euro CAD. Quite flat. Was looking for upside from the 7.8 and 886 fib. No, 61.8 from this fib and from this fib. The 61.8 was a bounce, but wasn't the bounce because we got a bigger retracement. It was a bounce, but we got one more downside down to the 78.6 fib. That's looking like a support level for the moment. Would depend, of course, on the euro. So I'd be still cautious with the euro CAD. Depends also on the dollar CAD. Let's take a look at the dollar CAD. Dollar CAD didn't have space to move. It was just trapped in this kind of like rising wedge formation. Every time it went up, every time it broke a top, it just fell again. Broke a top, it falls. Broke a top, it breaks the top, it falls. There's not this pattern is not allowing the USD to gain substantially against the CAD at the moment. And this rising wedge is acting as a trap and not allowing the upside to take place here. Now, the euro CAD did move up more. That's because the euro dollar was generally parts of the day moving to the upside on average. So the euro CAD did move, decently, but the dollar CAD was struggling. It did move up, but it's just very choppily. That's why it's making this this rising wedge. Now, until we break out of the rising wedge, it's really not too interesting to me. Either we break out to the upside, but then we have a 50 fib. That's too close. Not interested in that. To the downside could make sense, but we have to be aware that the target of that downside is not that great, because we could easily break out of the rising wedge, hit the 50 fib, and move up to the 61.8 fib. Something like that could happen. Personally, I'm the most interested in trading either some kind of break to the upside like that. So let me put a green circle right there, or trading it from resistance like this. Not so much today, though. Let's take a look at the 50-minute chart. Well, we're still, let's see, we're stuck in between L3 and H3 since today. Approach L3, could be a bouncing spot at the moment. I'm not too interesting. Kiwi. Kiwi had an interest rate actually yesterday, and the currency moved a lot. Because of that, the Kiwi official cash rate went from 2.75 to 3%, by the way. So as forecasted, it was correct. It did move up a quarter. So 3% now for the Kiwi. Interesting, the interest rate hike. One of the few rate hikes that has happened in the last, well, what is it, 7 years in the meantime, I guess, or 6 years. It is already a very long time ago that we had regular rate hikes back in 2003 to 2007. Kiwi is one of those few exceptions, I guess, in this environment of late, but therefore gaining a lot of upside momentum logically with this rate increase. From Camarilla point of view, though, we've already close to hitting the H5. Therefore, the Kiwi, not that interesting in my opinion. Not that interesting. Maybe some downside here upon the break, but I don't know. It's too early to me. Too early. No. Neither way. It's more upside pointed. The momentum today with the interest rate. However, price is moving down. Plus, we already hit the H5. Therefore, not that interested in this one. Dollar Swissy breaking out of this channel here, and it's breaking out and hooking back to the 61.8 fib. That is therefore looking like a potential fall for this dollar Swissy. All right, looks like a retracement of this fall yesterday, And now with this hourly candle looking like that, that is looking pretty bearish. I would expect some continuation of that fall on the dollar Swissy if I look at this setup. So looking bearish to me, therefore your dollar may be also expecting the upside as we speak. Good. What else? Euro New Zealand made a downside, of course, logically because of the interest rate. Pound New Zealand 2, they all reached their L5s though. So the daily range kind of already being hit, and we can see as soon as we get to the L5, there's always that chance of retracement. We saw that yesterday as well, with the euro dollar hitting at H5, making a retracement after that. Alrighty, folks. 1 second. Alrighty. What else? So I'm not too interested in these pound New Zealand and euro New Zealand. I mean, maybe if it gets back to the pivot, let me get rid of this very busy template to make it a bit more visible for you. But in general, I mean, if I look at this 4-hour chart, it's just very choppy. Doesn't really look that appealing, does it, to me, to trade this? It's a triangle. It's actually, we could potentially have a bounce off the triangle, off the bottom of the triangle. Well, no, not that really that interesting. New Zealand got some follow through with the interest rate as well to the downside after a strong fall already, so that makes sense. Is it something interesting to trade? Let's take a look. L4. Well, there seems to be then some space, I would say. All right, so could be. Down to L5. Moving average is already pointed up. So what I would like to see is a dip down, a pullback, and go again. Something like this, preferably down to L5. That could make sense. Not that I'm a big fan of the New Zealand, just like the Euro Pound, but that could be potentially interesting. Alrighty, what else? I think we already took really a look at the usual pairs we do. Now we're getting into really more exotics. If we look at odd Swiss, for instance, the odd Swiss also had a lot of downside. Logically, all the odds had, so there's always that chance of a follow through with all of them. In fact, odd cat 2 for more downside. You know, this is all looking, no matter what currency we look at the Aussie, this is all looking like momentum followed by some correction. Some downside seems therefore likely. Which one is actually the best would be interesting. We could take a look at the Euro Swissy, for instance, to see, you know, is it more interesting, the Euro odd, or is it the odd Swissy more interesting, for instance? Euro Swissy. It's a good question. Well, it looks more like Swiss franc strength because we broke out of this channel, this to the upside. If anything, it looks like Euro Swiss franc is more at resistance than at support. So this could be a classical break, pullback, and go. The odd Swissy, therefore, maybe even better than the Euro Swiss, the Euro odd. Let's take a look. Yeah, that could be interesting. It's breaking a trend line as we speak. Could be a good one right here. It's a bit risky still because the moving averages are flat. If you want a bit more follow-through expectations, then maybe break, pull back, and go when the moving averages have turned like this and are providing an angle could be a good optimization to wait for. But the Swiss franc looks pretty strong. So Aussie looks pretty weak. I mean, relatively across the board, if you look at all the Aussies, we saw a lot of momentum to the downside logically. Odds Swissy, therefore, maybe not a bad combination, in fact. Is there anything else to discuss? Let's see. One thing I would like to see is Aussie get to the pivot or H3. That would make me a bit more comfortable with taking an Aussie trade, because then I know the odd USD has reached my preferred resistance level, but might not get there though, I'm not saying. Euro dollar seems to get followed through. We had upside momentum. Remember, always wait for direction first. Pull back and go. So this is looking good for upside now, I would say. We got our first bullish candle. This could be our second. So in the next couple of hours when we get a retracement like that, the follow through, I should actually do that on the 5-minute chart. Follow through, retracement, something like that seems to be likely. Now, I actually forgot to talk about trading psychology. Apologies for that. Because I was so focused on technical, the technical elements of our trading today. I guess one of the difficult things with trading psychology is the balance between following a plan and looking at something that you might have a pretty good idea that it's not going to work. There's always good to have some discretion, I would say, in one's plan. It's just we have to be honest with ourselves and find a balance when we're trading knowledge and reacting to charts. That's fine. If you have a certain idea about a certain oscillator and it's maybe not mentioned in your trading plan, then try to incorporate that in your trading plan. It's difficult, of course, to create a plan that incorporates each and every single situation scenario that one could face potentially. But in general, if we do encounter something that is not in the plan but would go against our plan and still would be seemingly optimal as a decision, then it would be good to think about it, why or how we could change the plan. Of course, after sufficient analysis, you don't want to change the plan every day because that wouldn't be a plan, would it? But you know what I mean. To match really reality as much as we can and match our psychology as much as we can. One of the difficulties probably some of you at least have, and all of us had at one point or another, is finding the balance between letting, for instance, a trade run, taking profit. These elements have a lot of psychological impacts because some traders might have difficulties being in profit and therefore are more keen on taking profit. Some traders might have difficulties with taking profit and rather use a trading stop loss. So it depends. The problem that people might bump into depends, of course, from strategy to strategy and people to people. I had problems with, for instance, if I had a TP, I was always nervous if it got within like 1 to 2 pips, even within 5 pips, because then the whole calculation changed. I'm risking maybe 40 pips of profit to get another 5. Why should I wait for those 5? Why not take profit right now? Of course, the answer is clear, that you need those 5 pips to gain the edge in the long run, to gain that profitability in the long run, right? Because those 5 pips could be a lot. It might not seem a lot, but in the long run, it could be an extra, I don't know, half a unit of, well, not that, but maybe a quarter unit or 0.15 units of reward. And although that doesn't seem much, you know, if you add it up trade by trade, that could be a tremendous difference at the end of the month and year. So keeping, you know, taking 5 pips off that profit could have a substantial impact on the average win that we make. And of course, it's all about the average win versus the average loss compared to the win percentage and loss percentage. We have to do our utmost best to optimize both sides of the story without severely, you know, damaging the other side. If we, for instance, we could try to aim for a great high reward, but if it only happens 1 in 1,000 times, well, it's obviously not going to be, we're not going to be able to psychologically handle that. Let's say we have a strategy that says we only have 1 winning trade out of 1,000. You're going to take every loss, you're going to lose an incredible small amount, right? All the 1,000 losses will add up to 10% loss in total, or 20, let's say 30% loss. But that 1 win is going to make us 50. So at the end of the day, out of 1,000 trades, we have 20%, or even 60. We have 30%. You know, this is a random example, right? It's a profitable system expectancy, right? Is it anyone in the world is going to trade it? No. Why? Well, it has to do with our psychology. Most of us will never ever be able to handle that. And logically, I'm not criticizing. I wouldn't trade it for the life of me, because it's too much insecurity, right? 999 trades. That's just an average. It could take longer, right? So we need to find something that not only a strategy that matches us, not only a checklist, not only a trade management plan, but also statistics that match us, right? An equity curve that is something that when we look at the equity curve, we can say, okay, that's something I can trade, that's something I could handle, that's something I can manage, that's something I can understand, that's something I can live through. And it's very important. That example I gave you is an unbearable one, right? So taking profits is an important, obviously, equation for the average win, mostly. Sometimes even the average loss. If you have a trail stop loss, you'll be cutting the losses short. If the take profit level or a trail stop loss sometimes also influences the win percentage, but it's more important, I would say, for the average win versus average loss. The battle here is finding something that matches us, right, as well, and something that we find, first of all, is profitable in the long run, but second of all, also we can match with our system, with our psychology. All right, so let's take a look at, for instance, a trading stop loss, right? You can have basically these options. You can have a tight stop loss or a loose stop loss. Well, let me do it this way. Tight stop loss, loose stop loss. Then you can have a TP that's aiming for not, let's say, a tight, relatively tight, like 1-to-1, or a loose one as well. What would be the profile of a system expectancy like that? Well, tight is going to be It's going to have, yeah, the R to R ratios are going to be, the average wins are going to be in balance, right? They're going to be about the same. Average win is going to be about the same as the average loss. And it's going to be, 50-50. So it's going to be it's going to be a tight balance. You're going to have to really tweak with it. You're going to probably trying to get 55% winners or something like that, and 45% losses, and average win might be, I don't know, 1 point or 0.6, and the average loss could be 0.5 or something like that. That's going to be a very small difference probably. So it's going to be, there's going to be small wins, small steps forward. It's going to be like a continuous dancing match there to get forward, right? It still could be profitable, but that's the profile. Loose take profit is going to have, we're going to have less winners, right? We're going to have maybe anywhere between 30 and 40. But our average win is going to be higher, right? It's going to have to be at least 2 to 3 times. Somewhere in there, at least. But our drawdown is going to be bigger, therefore. The loose stop loss and a tight TP is more like scalping, so you're going to have a high win percentage. It's going to be actually more like 80. But our average win is going to be a lot lower than the average, it's going to be lower than the average loss. Then we have loose, which roughly, it depends on different parameters, but could be, it depends. It depends if there's a trail stop loss used or not. Could be similar to the TT one, the same balance. But if you use a trail stop loss, and that's what I want to get to, sometimes if you use a trail stop loss for intra-week trading at least, not for intraday necessarily, then what is the nice part about having a stop loss, a loose stop loss, and then tightening up the trail stop loss is you can, in a certain degree, mix the ideal of two worlds, in the sense that, remember we had the loose stop loss here and a loose TP? With a loose stop loss at first, you're having the advantage that the win percentage is not that low with a loose stop loss. But with tightening up the stop loss as the trade progresses, you're cutting losses short and you're letting winners go. The advantage of that is that you have an average win versus average loss that could indeed hit a 3-to-1. But the advantage is that the win percentage will still not be that low and could still even hover or be close to a 50% mark. For instance, that could be a combination for intra-week trading that helps with a trail stop loss of gaining both worlds. But it was, just because I liked that solution for what I considered my weakness, and as I said, I'm coming back to where I started off. Sorry for this bit longer detour, but it all started with, or not all, but part of the story was that I had problems with waiting for the TP to be hit and really ran out of patience. I was cutting sometimes my winners short, although not much. Still, those X number of pips were a difference, and that's when trail stop loss for my psychology was the answer. That's basically what I'm trying to indicate. I'm not saying that this is perfect for your type of trading, your type of strategy, your type of psychology, but for me, I like the fact that I don't need necessarily 80% winners, but I want to see equity growth at certain times with bigger leaps. What I like about a trading stop loss is the fact that you do have the opportunity to sometimes hit a 5-to-1, a 4-to-1, a 6-to-1, and wipe away 2-3 losses and still be way in profit. That's what I like about a trading stop. And I like the average win ratio here. And I like the fact that it still doesn't have a very negative impact on the win percentage. I also like the fact that it has why is the average win, not the average win is so big, but actually the average loss is small. Therefore, the win doesn't have to be too big before it already amounts to 3 times as much as the loss. By cutting losses short, that works well for my psychology. But it depends. You know, what I like about cutting losses short is that I just take small losses, and that's good for me. And then I have a win, and I have a small loss, and I have a win, and I have small loss, and I have a win, small win, let's say. I like that personally, that particular profile. As long as it doesn't get too dramatic in the too low in the win percentage. I don't want to go lower than 35, that's for sure, 40. Because then the drawdown and that's then a bit of a disadvantage. So I wouldn't want that. But my point is that the trading stop loss allows that for me. So that was my solution. Maybe you like more win, small win, small win, small win, bigger loss. Small win, small win, small win, bigger loss. You know, many people do like that more than the opposite. And people who don't like trading stop losses usually could have a profile like that, where usually their losses are full losses, and their average win could be at best maybe the same as their average loss, for instance. And they want a higher win percentage. And yeah, it's possible to make profit. It's just, it depends. It's just a different style, a different strategy. It requires different things again. The thing you want to avoid, though, is that you are not trading one that doesn't suit you, first of all, as I already mentioned a couple of times. Let me see if there's anything else I wanted to add. One thing you might want to take a look at your evaluation sheet is how many full wins, let's say, how many full losses do you have? Looking at your losses, how many of those losses are less than a full loss and how many are full losses? Look at those numbers. Let's say I'm just random example, 100 losses this year. And 80 of those are full losses and 20 are less than full. Even if it's 0.98, I don't care, less than full. Or 100 of those 100 are full losses. Or do you have 20 out of 100 only full losses? Depending on that answer, if you have 100 full losses, you're probably not using a trail stop loss, that's for sure, which is not a bad thing, but it will give you some insight about the structure of how you're trading. Is that something that suits you? Try to answer those questions, see if it's something that matches what you want to see. Then take a look at your average win. Is that how many of those average wins are 1 unit of risk or higher, and how does that number compare to your average to the full losses? So full wins against full losses, right? For instance, you have 100 losses, 50 of those are full losses. You have 120 wins, and 70 of those are full wins. Well, then the ratio of full wins to full losses is 70 versus 50, right? That's what I meant. Take a look at that. It'll be also interesting. If you have a lot of full losses but only a couple of full wins, then, well, you need an extremely high win percentage, wouldn't you? And if you don't have that, then there's something obviously not adding up with that. That's difficult to say what exactly, I mean, but it could be that you're cutting your profitability early, cutting your winners short, because you see a trade, for instance, let's say going your way, but it's going against you, and you decide to click it out. It could be these things, and that's of course psychologically oriented. This example. So that's, I think, about all what I wanted to mention, at least, yeah, for the moment. Can't think of anything else. So pound is H3 at the moment, did respect that level, was trying to push through it but couldn't. Your dollar is at the H3 too. Struggling a bit there. As I said, watch out. This upside momentum could happen. I just want to see preferably a bit of a break of H3, as I said. Not happening as yet, though. Aussie's falling. Yeah, it's pity. It doesn't look like we're going to get the upside to the pivot or H3. It would have been better, but if we're not breaking this trend line, then the next fractal could be already a break to the downside. Even maybe here, but I would still be a bit more patient. Well, folks, do you have any questions? Because we're getting close to the end of our session, so maybe you have a question or two for me, and we can have enough time to answer that. In the meantime, dollar Swissie indeed continuing down a bit, as we said. Kiwi falling. Was a bit scared of that could happen, but didn't think it was worth it, to be honest. The Aussie, I think it could be interesting to trade the Aussie against one of these pairs today. It's just that would have preferred to see the Aussie go to H3, but if it doesn't want to go there, then, well, I guess we'll have to adjust. I would like to see a fractal, a new fractal below this blue line, and a break of that new fractal. Hope that's clear. But maybe, as I said, the odd Swissie is better. Odd Swissie moving down a bit as well. Well, I would like to see it go up to H4 as a reversal trade for the downside. But that would be an interesting resistance spot. Whether we'll get there, I don't know. H3 could already be it, actually. However, I'm not a big fan. I would rather wait for, got this support trend line. So we got these options. A bounce here up to H4. A lack of follow through and a break of the trend line. At a resistance downside from H4. Personally, I like the downside from H4R1 probably the most at the moment. The break of the blue line or the bounce off the blue line to the upside could happen, but are both not really that appealing to me at the moment because they're not as secure, I would say, as the R1. Looking at this hourly, we do have a bullish candle. So I would say as long as we stay roughly above this hourly low, still a potential higher, slightly higher probability of a bounce up to the R1 than maybe the break. However, if I look at the entire 4-hour picture here, I'm not a big fan of trading it right here. Why? Because it's in the middle. Let me say it this way: it's had it down, up, down, and now it's about halfway. We'll be interested in seeing if we get a 4-hour wick like that, but otherwise I'd rather wait for it to go to a bit more of an extreme, like hit this resistance spot, these tops in here where I have the magenta lines, or either go up there and hit those resistances or break these supports for more, potentially one more fall. That's about it at the moment. Take a look at the Asian consolidation. Where is that? Let's see. It's always difficult to say exactly about 1-2 hours. It's more about what potentially could happen today, I would say. What levels could be important within today. What levels will be important in the next 1-2 hours is always a bit difficult because time factor is not that easy to guess, I would say. Let's see, this is let's see. And I thought I could maybe see some extra info here, but looking at today, there has been some upside so far. I don't know. I wouldn't trade this break here of this trend line though immediately, personally. I would rather wait for a bit more confirmation of the following. If it breaks, fine. Let it break. Let it pull back. I would wait for the continuation here. Otherwise, with the pound dollar, you never know. It could actually break and then bounce up again. And you don't want to short it right at that bouncing spot. That could happen. That's why you want to wait for that turn. So be aware of that. Pound dollar has that sometimes that tendency to be pretty spiky, especially when it breaks a bottom like this bottom here. Yesterday had a bearish engulfing twins though. So although I would like the price to go back up to 168.20 and retrace more of that bearish candle, the reality is that the current day's high at 168.06 could be all of the retracement we get of yesterday's candle. It could be. As I said at the very beginning, we're not sure if it can get that high. It would be great if it did on the 5 up to this level. It would be a great retracement of that yesterday's bearish engulfing twins, but we don't know if it can get there. If it does, it will be an interesting zone. But in the meantime, it could be this H3. Right? We said that. So why? Because if you look at this daily, we can see why. It's a pretty bearish daily candle yesterday. If we do break this blue line, though, there is a decent chance of getting a break, pullback, and continuation. And this H4 then seems to be maybe less likely than it is now at the moment. Euro is looking up, up at the moment, though. pound is hanging in the air. It's right at the blue line. But once again, if it does break the blue out, still wait for the confirmation of downside, because you never know, because the euro is looking bullish, so you never know. Euro pound is probably moving up, therefore. Well, folks, tonight we have a great webinar, I would say, on stop losses. So that could be useful if you find the info interesting regarding system expectancy and trading psychology. Stop losses, obviously, and when to move them, when, where, is of crucial importance, because the stop losses are exit, most cases, or a TP, right? So it's a crucial part. Entering is certainly important, but it's only half the story. Logically, exit is the remainder, and how we manage that trade up to exit is something that I think can always be optimized. I do think that when traders look at strategies, they're more geared towards looking at entries than on how exiting a trade. And think about it this way. The best of the best of the best can really almost enter at any point enter at any spot almost, but know when to cut their losses short and let their winners run and still exit on average very profitably. And the entry could be at random. Now, I'm not saying that everyone should do this immediately. By all means not. As I emphasize, is really you have to have a lot of experience in that. Of course, why would you enter at any spot? It doesn't make sense. You want to enter, of course, at a spot that you have an edge, right? Point is though that the trade management is just an important part of the profitability. Now we have that trade plan. The more experience you get, the more easier it is to understand when how the trade management should be done of a trade to have a good expectancy of the exit versus the entry. So I just try to emphasize that both sides, the entry and exit, and trade management of that are important. All right. Well, today we will talk about a very important part of that, because it will be on stop losses, and trading stop losses. So I encourage you to join tonight at 6 p.m. Central European Time. Nana will be there too. We'll look at this topic together, and that will be the last webinar of this week. Next week we'll be back, as always, with the same lineup for the last week of May. As I don't see any questions, I guess we'll wrap it up for today. Thanks everyone for joining and spending your time with me, and I wish you all great trading. Have a great day.